Our next guest is the mortgage geek and vice president of Cornerstone Mortgage Group. Please welcome back Sean Cahan and his special guest, Adriana McCleary.
Welcome to the show.
Yes.
Welcome back, Sean.
Thank you.
Adriana.
Thank you.
For the first time.
Yeah.
You are here. Sean, why do you want to bring Adriana today?
She is my loan partner
Mhm.
at the bank, and she pretty much handles, with Matthew, she handles the entire pipeline from start to finish. And now we actually brought a new little twist also, is that now we're processing our own loans within our own little group as well. And so a year and a half in the industry, I think she's closed near 500 plus escrows already.
Whoa.
And she is excellent, so I wanted to bring her on the show.
Awesome.
Bravo.
Yeah.
Well, today we're going to review the Big Short. Did you see this? So the guy, Michael Burry, is getting the guy who Christian Bale. So if you haven't seen the I don't want to give away too much, but the Big Short's about the mortgage meltdown. And there's a guy on there who's kind of a quirky guy, one of those kind of almost like a savant, if you will. Someone who's just really, really, really smart. And he figured out that the crash was going to happen before it happened. Okay, and ultimately made billions of dollars as a result of figuring it out and then taking action.
How much did he make?
He made like 2.9 billion.
2.67, I believe.
Yeah, 2.67.
Like before the crash even happened? Or?
No, as of a result of the crash,
Oh, wow.
he bet against the housing market essentially. So he played the downside. That's why it's called the Big Short. It's called shorting the market when you bet on it going down.
Yes.
It's called long the market if you bet on it going up. So the Big Short, that movie is about the Big Short. Guys who made billions of dollars betting against housing when everyone else was saying, housing, you can't bet against that. That guy, Sean, is now saying that there's some creaks in the system. Let me read to you exactly what it is that Michael Burry, who's played by Christian Bale in the movie The Big Short, let me read to you exactly what he said. First of all, he was asked, where do we stand now economically? He said, well, we are right back at it, trying to stimulate growth through easy money. It hasn't worked, but it's the only tool the Fed's got. Meanwhile, the Fed's policies widen the wealth gap, which feeds political extremism, forcing gridlock in Washington. It seems the world is headed toward negative real interest rates on a global scale. He's saying negative real interest rates on a global scale. Interest rates are used to price risk. And so in the current environment, the risk pricing mechanism is broken. That is not healthy for an economy. We're building up terrific stresses in the system, and any fault lines there will certainly harm the outlook. That's what he's saying.
Yeah.
Now, Mr. Mortgage Geek, what do you think about what he said, and do you think that the mortgage market could be melting down again?
Yes, absolutely, I agree with what he's saying. Where the prices have gone, the debt to income ratios, I'm actually going to be pulling a report. I'm going to send it over to you guys when we get back. How many applications in 2013, 2014, and half of 2015 were 42% debt to income ratio and below, right? And we're just using a 45% because that's a standard conventional GSE market, not the FHA where it can go higher. But more and more what we're seeing in underwriting right now is 44, 45, barely creeping, barely able to qualify for the houses that they're getting into. It's already here. It's happening right now.
Wow.
Yikes.
So what you're saying is that people are buying basically as much house as they can possibly qualify for.
Yeah. I mean, how many
Absolutely.
applications do we see that we're like, you barely qualify?
Countless.
Yeah.
Yeah.
What's interesting to me about the mortgage market is that they still don't look at other expenses, other household expenses like childcare and stuff like that. It's just based on the credit report, right?
That's what's so great about the VA loan. It's a residual income product. That's how all mortgage underwriting should be, residual based. What is your net dollar at the end of the day after you pay your taxes, after you pay your child care, after you pay your utilities? It's all part of the residual income. Why doesn't everyone else go to a residual income or at least like a backing? Hey, DTI is great, but residual income is real.
Mm-hmm. It is. It's real. That's
Why
how
don't we
much
use that?
net
I
dollars.
always say that.
Yeah, it's really interesting. But no one's changing the game right now. So when you go back and look at it, it was the big banks, Wall Street, really, who caused who propagated, I should say, not
Was it
necessarily
Wall Street?
caused. It seemed like it because Wall Street was packaging all that stuff up, right? And they were selling it to municipalities all over the world. That's how it became a global economic crisis instead of just an American economic crisis. It was the American housing market that melted down the world economy.
Correct.
Because Wall Street
They're
was
buying our paper.
Yeah, they were selling that paper. They were telling people it was guaranteed. They were
Yeah.
going to small towns in Germany and saying, hey, you should put your pension money into this crap.
Didn't it crush Iceland?
Crushed Iceland, crushed a bunch of little countries.
Yeah.
I mean,
crushed 'em.
destroyed towns, destroyed them. So I don't think that is going on, but at the end of the movie, they say, by the way, CDOs, which is what we're talking about, packaging up mortgages and selling them as a product, they were called CDOs, or collateralized debt obligations.
Correct.
They've renamed them, and they are now selling them again. So it seems like we're right back there. Sean, I know you are in the process of selling all, I think, of your real estate holdings?
Properties left.
You only have 3 properties left, so you pretty much sold them all.
Uh-huh.
So if you're in that boat, what should people do to protect themselves? You know, because there's still people out there who want to buy homes, and there's still people out there who it makes sense to buy homes, given their situation.
Their income, I think like what's stopping the industry from really kind of experiencing a accelerated decline, right, is due to the interest rates, being able to refinance. A lot of people got into an FHA product. Now we have an LPMI conventional product. Well, it's been around, but now it's being really pushed out there a lot. And so individuals are able to refinance, are able to save $100 or $200, you know, a month. I would say if you are in a position, it is best to refinance into like, you know, a pretty secure product. And really, I think the mortgage industry is going to boom, to be honest, for the next like 3 to 5 years.
Really?
Because I think that people are still going to purchase, and it is on the lower side of the inventory. But we're going to have a bunch of refinances. So I almost am looking at it like a late 2004 to like an early 2007.
I was just going to ask you where you think we are in the timeline of the last one. You think we're at 2004, 2005?
Yeah. I mean, look at the commercial. So Scotsman Guide released an article saying in 2007 we did $507 billion of commercial lending, right? We're slated to do $513 billion, which is more than 2007 in the commercial sector. Now we're seeing things at like 3.5 to 3.75 cap rates. I got introduced to another one, new development deal, and I was like, well, what's your exit price on this thing? And he's like, oh, this like 21 million. I was like, what cap rate are you using? Oh, 3.75? Okay, count me out of that deal. I mean, that's not sustainable.
So the cap rates are just too small for the given risks, is what you're saying.
And I don't care if it's apartment lending or not and rents are going up. You can tell me everything under the sun, but I just want to look at like basic dollars and say, is this sustainable? Is it not? And I think where we're going right now, it's not sustainable. No. But do I think that we're going to thrive over the next 3 to 5 years? Absolutely.
It sure seems like there's so much steam behind this locomotive that it is just charging through. And it's like, get on the board or get off the tracks. That's what it feels like. The market feels like that, which is how it felt in 04, 05. It's so funny. It felt that way. It was like, dude, don't talk trash. Either buy a house and sell it and make some money, or shut up. You know, so I think that now we have way less inventory than we did then.
Yeah.
I mean, way less inventory. More demand. More people live in San Diego. We have more housing needs than we've ever had. So I could see this thing steaming along for a while still.
But why don't you think we have inventory? Because people don't have another place to go. If you
That's
give
it.
more inventory, that's just, hey, there's going to be more uplegs. There's going to be a lot of uplegs if there's more inventory. There's just no inventory because people are like, if I sell, where am I going to go? The interest rates are great, so I'll just refinance. So I really think that we're going to see more refinances than we did in the past, just because people are just saying, well, I'll just stay in my house.
One of the indicators that I saw from last time that I paid attention to this time, that I didn't pay attention to last time, was, you remember when the housing was booming in the 04, 05, 06, 03, all through that, where you would drive down a street and like 4 people would have construction going on, like major construction progress stuff going on, and their house, like 4 people per block were doing something. If you drive through Del Mar right now, that's exactly what you see.
Yes.
Yeah.
The streets over, I mean, that's exactly what you see. People like completely facelifting entire properties, you know, construction, huge interior construction projects going on. Typically, that's what people do when what? They realize that, hey, we're sick of our old house, but if we sell, what are we going to buy? So let's refi.
Let's refi. Let's cash out. Let's
Just
remodel.
cash out 200 grand and make a new house out of it.
I mean, how many more people are, when their appraised values are coming back? And Adriana gets to see more of the data than I do, you know, how in our position. But I would let her speak on this. How many more people are asking for cash out?
I mean, 1 out of 5, at least.
20%.
Yeah,
Has that gone up in the last year or two?
definitely. I mean, we just had one on Friday
Yeah.
that wanted to do cash out because their appraisal came in higher. So,
Oh, so the appraisal came in higher, and then the light bulb went off.
yeah.
Cash out.
And we had
Oh.
one 2 weeks ago where it came in higher than anticipated, and he wanted to take out even more. He just kept asking, "What's the max that I can take?" So,
These are indicators.
It is.
These are indicators. It's not going to crash tomorrow, though.
It will not.
There's
No.
too much steam.
Everyone qualifies for their mortgage today, right? We don't have negatives. We're not at 125% LTVs. We're not running up, you know, and having negams or 1.25 inch start rates or teasers. Like, how many people really get into 5 and 7 arms anymore, right? There's just not that prevalent in today's market.
It doesn't make sense. It doesn't really.
Yeah, it's like, hey, you want a 3.5 on a 5-1 arm, or do you want a 3.87 530 or fixed? Right? People are qualifying, but with the problem, so it's not going to have a huge crash. We just won't see even a 20 or 30 or 40% market. But I think a 10% with a sales price or a short sale of 7, now we got accumulation of 17%. Ask how many people would be able to stay in their house if there's a 17% drop. Not very many.
Well, how many people can continue making their payments, right? Because that was the real problem. Even people who got those ninja loans, as they say in The Big Short, even people who got those, they were making their payments, right? They're making the payments. But then all of a sudden it's like, wait a minute, it's upside down by how much? No, I'm not making that payment anymore.
right.
That's the real question, is when is that going to happen? Is it going to be a year from now, 2 years from now, 5 years from now? I'm not sure. But when Michael Burry speaks, people listen now. And I think it's smart to take heed. And based on what you've said, you agree with them. So there's the two smartest people I know to look at for this type of thing. Pay attention. This
Can I
doesn't
say
mean
one last thing
Please.
about that? Is that before, no one missed their payments for 100 years. And we experienced something that we've never experienced before. Now people got the taste of what happens when they miss their payment. What? Nothing.
right.
Their
No
reaction
repercussions.
to a decrease in market will say, I've already been through this. I can short sell. I don't have to make payments for 2 years. I've already experienced that. My neighbors don't think badly or poorly upon me of doing this right now because it almost became so easy. Oh, you short sale, you're able to buy again. So is it going to happen quicker? Absolutely,
Yeah.
because of that.
All right, great stuff. Check out The Big Short if you haven't seen it. Thank you guys so much for your time. Mortgage Geek, Sean, Adriana, thank you so much for being here. And stick around for more Smarter San Diego TV, where we guarantee to make you smarter than everyone else, commercial free.